Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we are talking about mortgages again, one of my favorite topics, and credit cards, another one of my favorite topics. You see, you have this giant expensive purchase, and naturally you're like, well, I should be able to get some credit card points or intro offers out of this. Can you? How does it work? What should you know? What should your strategy be? Well, we're going to cover all of that. So, of course, if it sounds interesting to you, then go ahead, press the subscribe button, and let's get to work. So, as we said, the gist of it is anytime you want to make a large purchase, house pretty large usually, you're like, hey, how can I line up a credit card with this? Because there are a ton of fees associated to mortgage process and buying a home, as you can imagine. So I'll break this down into three parts. So kind of like, beginning before you're, in process, when you're during your in process, which means you're under a contract, you're working through with the lender, and then kind of like post closing and after, once you've closed the loan, and on through. So you can do chapters, tools down below if you want. And I did spend quite a bit of time in mortgage banking on the mortgage desk, and I've done repurchases and a refinance as well. So not a ton by any standard, but like enough to have gone through this a few times. And you probably know my credit card track record by now. So with that, let's get started here. So the first part is, let's say during the home shopping time, again, on the buy side, right? There's not really anything. You just go around and look at houses. So let's say you found one. Okay, cool. They accept your offer. Even better. This is exciting. So now you're under contract, but you're probably not fully in process with the lender yet. So what you can do in this time, you usually get like a due diligence period, usually a week. And that's like your time to like check out the house, make sure there's no glaring red flags, and the rules, they'll tell you the rules are different, but like technically in my experience, like even if you didn't like the diner down the street, you can just like walk away, get your EMD back or your earnest money deposit, right? So fees in this are usually entirely optional. Your big one here is going to be like a home inspection fee. It's optional, but do it. Just get one, right? I don't know, anywhere from $400 to $700. They vary depending on how big the house is. You're buying some land, you can pay a little bit more. But it's just an inspector goes through and checks everything to make sure it's fine. There's no red flags. And there's always going to be issues. I mean, always. It's a used house. On a brand new build, there are more issues than you would think. It's never going to be clean, but you're just looking for like, hey, this thing's going to tip over. Like that's like, what's the story with the bear blows and the house goes down? Like the wolf, that you don't want that. So anyways, you can do other things. People sometimes have plumbers come through and electricians come too. That's all fine. You can put that on a credit card. No big deal. That's just for you. So if we move, and again, if you're selling, again, there's nothing really that you would put on a credit card at this point. I mean, you'd be talking about maybe fixing up stuff. You got a listing agent, they notice some things you want to fix, then sure, something like that, but nothing directly dedicated to the process and to pay out, your listing agent. That's going to come out of your proceeds. You're not usually paying with a credit card or anything like that. So there's that. So again, mostly on the buy side. So once you get on the process, basically when everything comes through, you're like, okay, good, I'm definitely moving forward. Then you can tell the lender, like, yes, they're going to send you like your final loan package is something in there called like the intent to proceed. And that's when things get like real from the lender side, right? Before you get the intent to proceed, your intent to proceed, they can't charge you or do anything other than like the credit pull, the credit inquiry they had to get to make sure you were fully qualified. Now, once you sign the intent to proceed, like I'm proceeding with Rocket or Bank of America, whoever, now is when the fees start to come into play. So my latest one, what they did was the Rocket Mortgage, and they asked me for a credit card to put on file. I think they charged you like $500 initially, but the reason they did this or do this is because there's a lot of things that could go wrong in the mortgage process, like an appraisal, for example, that we're going to talk about right after this. So, if for whatever reason the loan falls through, you're likely to just not pay them and leave, because a lot of these fees, as we're going to talk about, are called paid at closing. They're bundled into your cash to close. Your cash to close is your principal, your taxes, your insurance, and all those applicable fees, right? So they will usually get a credit card or some form of payment. So if the loan falls out for whatever reason, your fault, seller's fault, whatever, these fees were still applied to you, so they'll be covered and they won't be out all those fees. So there is that. There was like a $500 charge, and it's not, you're not paying them. That $500 is like thrown into closing. You get it back. It's kind of like, if you ever take your car in, right, and they're like, well, there's a $50 inspection fee, but then if you go along with the service, then we just credit that $50 to the final price. That's generally how it works. Every lender could be different. It is worth noting, but this is just how the last one went. So then you got a few other fees. But the majority, again, is going to be like that paid at closing. That's kind of how the fees break up. But the ones that you could pay with a credit card potentially, appraisal is a big one. I've seen it done a few different ways. So the place I worked when I was literally on the appraisal desk, what we would do is once it was time to order the appraisal, we send the borrower a link to pay for the appraisal. This was like 2013, 2015 time. So the prices have changed, but single family residence was like $400. And again, I think it's more expensive now, $500-$600 maybe. It's going to depend on the size of the house, the property type, multifamily condo, they're all different prices. But anyhow, they could send you a link to pay for it, and you could pay by credit card. That was fine. But I've also seen it where it's automatically we pay it, meaning the lender pays it, and you pay it at closing. And the reason being, the two schools of thought again are, number one, the bank needs the appraisal report. It's not yours, even though you're paying for it. It's a pass-through cost. Now, you're required to get a copy of it, but on the top of your report, it will say, like, Rocket Mortgage as the client, right? And so let's say you're buying a house that's, I don't know, $200,000, and the appraisal comes back at $190. Well, value is not supported, so there's a decent chance that loan's going to, what they say, fall out of process, because the bank's like, all right, well, we can still do it, but we can't give you 200, right? That changes. So your options would be to, pay the extra amount yourself, go back to the seller, have them lower the amount. There are options, but we're just trying to guard against us having paid $500 for the appraisal. You saying, well, I can't do anything with this, and just like leaving to go find another house, right? That's what they're trying to guard against. So that's why you could pay up front for it. The back end, the other argument of why we would put it at closing with having taken your credit card info is, one, you can argue most people aren't looking to pay for things along the way. We are, most people are not. So it's an experience thing. And number two, you'd be surprised how many people aren't in a hurry. Time and time again, everyone says this is your biggest purchase, your biggest purchase, biggest purchase. I've seen a lot of people say, okay, great, we'll handle it when we get back from Europe. See you in 2 weeks. That's not how it works, right? You got rate locks and everything. So the idea is, if we control that, we can get it paid instantly to the vendor, being the appraiser, and just keep it moving. Again, just two schools of thought. If you ask to pay for it outside of closing, would they let you? Sure, I don't see why not, but it just might not be in their process. Other fees here, maybe things like, it's possible to need like a final inspection or follow-up appraisal. So the appraiser goes out and, it's an FH. Let's just say one of the crazier ones I've seen, right? The door was locked. Like, for whatever reason, the current occupant would not let them into this room. Well, I can't finish the report if I can't photograph every room. Now I've got to go back out again. We call that a final inspection. It's like a 1004D form. That was like $150 back when I was doing it. Same deal. You're not rooting for this, right? It may take some more time. It's more expensive. Don't root for it, but I'm just to be thorough, right? Other fees, it's possible they condition for things like surveys. I've seen pest inspections or termite inspections depending on the product you're getting. Again, a lot of this stuff could be paid at closing. If you think it's going to come up, or your loan officer thinks it's going to come up, it's entirely possible you say, hey, let me pay for this now. I think it could be worth a conversation. Again, a lot just going to be on how the lender works. Really, that's the main one. Title fees are another big one. Title fees are what's called a shoppable service, right? So the appraisal we just talked about is not a shoppable service, meaning that you cannot pick the appraisal company or the appraiser. Why? Because you would just call your uncle and have them do it. We went through a whole era of this, right? So you can't do that. So it's not shoppable. It's whatever the lender says. Title fees, on the other hand, are shoppable. Title is it's really title and settlement. They're the people who go to the county, pull the abstract, pull the property records, make sure there's no liens on titles, judgments. The person owns the house, has the ability to sell you the house, right? Title is a good thing, especially on a purchase. On a refinance, debatable, but anyhow, so you can shop, you can find your own title company. It's not uncommon for your loan officer or your agent to have a title company that they like. I've done one where it was buying from a builder, and they're like, we're using our title company. Fine, whatever. I don't care. But you can shop it around, even though they can't make you use theirs, but it's not that big of a deal. I've never seen a title company take a credit card for those fees. And I used to work at a title company like for 2 years, 3 years. Is it possible? I suppose, but everything's possible, but I wouldn't expect to be able to pay any title fees on a card. In addition to that, the other big one is property insurance, homeowners insurance. That's going to be a big one to make sure, your house is fully insured. So your Progressives, your State Farms, those guys, historically paid for at closing, your first year up front. That's how it works. If you're paying less than 20% down, it's going to be required. If you have 80% LTV, then which means you have 20% equity, you can pay it yourself. You don't have to have the escrow account. So most people, again, are not doing 20% down, and you call the insurance. You'll go through the insurance company. It takes an hour. Every time I've done this, it takes an hour to go through it with them. They get your price quote. And at the end of the price quote, you say, yes, that's fine, I'll take it. They ask you for your mortgager's ISOA number. It doesn't really matter. It's basically the thing that they need to send the mortgage company a bill, and they will bill them. So, funny enough, I use Progressive, not a plug for them or anything. But weirdly enough, I got the best price from them on this last one. And I noticed in my Progressive profile, because I have other things through Progressive, that it showed that I could pay the money. It was like $750. And so even though I knew the company, the insurance, Progressive, was going to bill Rocket, I was like, well, I can pay this. So I paid it anyways, and I got a receipt. You're going to want to get a receipt. And then I submitted it to the mortgage company, and they're like, okay. And they took it off the closing disclosure at the end where you pay. That's not the process, generally. So just understand that if you do this and you try to pay up front yourself, it's possible. I did it, but you very well could be breaking something, meaning that generally these insurance companies just send bulk requests out to the mortgage companies, and as soon as I signed my documents and everything, it probably triggered Progressive to send a bill to Rocket again, because it has to be insured on the date you close, so they probably are sending funds in advance, and then Rocket's like, we'll get you back at the closing table, we're not really worried about the float there. All I have to say is it's not, by broken, I mean you may be paying twice or something like that. You will get your money back. It will work out. But the gist of it is it's not just intended for you to pay with a card up front. But you can do it. So there's that. Those are your main fees. I mean, there's a lot of other fees. Again, on the closing disclosure, I'll probably put one up earlier. I could put one up again. But again, you've got your origination fee, which is a percentage of your loan amount. You've got your rate lock fee, your credit monitoring fees, all those title fees, courier fees, doc prep fees, all that stuff. None of that. That's all, again, done at closing. There will be two columns. Again, as you can see, paid outside of closing, paid at closing. Generally, most of it's paid at closing. Again, as we said, it's primarily ease of use. I mean, most people are buying and selling. You have a lot going on. It's just one less thing the client has to worry about, and it puts us in control of it. And we got your credit card file. It's a better experience. It doesn't feel very ticky-tack. Number two, as we've talked about in other videos, we don't really want people using their credit cards. Yes, you can have credit card balances. I use my credit cards during a purchase. I let them close with a balance. We're really looking out for, hey, you went out and bought Viking appliances, now you owe 10 grand on your card. Even if you have the money to pay it, it's still something we have to check and document and rerun your numbers to make sure it doesn't mess up your vitals, right, for your loan. So there's that. So long story short, the process just really isn't set up to facilitate a credit card despite all the fees. Plus, someone's got to pay the processing fee, right? That's another thing. It's always 3%, Now, post-closing, we've done videos on both of this, but post-closing, in addition to just keeping your house afloat, the big ones, the only real mortgage-related ones are going to be once you get out of escrow, if you so choose. You can keep escrow forever. And depending on the product, if you do FHA, which I have an FHA loan, those have to stay in escrow. But if you do conventional, you can pull it out once you reach 80% loan to value. It means you own 20% of the home. Then you're talking about paying your homeowner's insurance yourself, which you'll do. You still have to submit proof to the mortgage company every year that you paid it, or you get a nasty letter in the mail and they're like, oh, we're going to force impose insurance. You could have just asked. Ask me how I know. And then your property taxes as well. Homeowners insurance is a layup. Property tax, debatable, because most of the time those things charge 2.5 all to 3% processing fees. But homeowners insurance, the big guys definitely don't charge processing fees. It's rolled in there. Smaller guys, brokers, perhaps. But again, we've got videos on both of those, and that's what I do with 2 of the 3 homes. I'll do it on the 3rd one eventually as well. And that does make for a nice little way to hit spend on intro offers. Again, you just have to budget for this stuff, which some people don't like to do. Others do. It's kind of really up to you. I think it's worth it, but really, that's what there is. That's kind of how it works. So despite seeing all those fees in this long receipt, unfortunately, the process really just isn't set up to use credit cards. So last point I'll make is I wouldn't do this, but I did it. I got a Bank of America credit card right before, like in between like my pre-approval and like full on, okay, we're about to do the mortgage loan, for like $1,000. And I think I was able to hit that intro offer again between home inspection, between that 500 and some change they put on the card, to hold basically as a deposit and like something else. So it's possible to hit a small one maybe, but again, it's just not set up to do that. Everything's set up to go paid at closing, which, as we covered, is all those fees plus your down payment, your taxes, your insurance, and all your cash, all your loan costs as well. So anyways, that's how it works. That's what you can and can't pay. Unless you know anything else, let me know down below. But in my experience, having done this as recently as February, that's how it works. So if you find another strategy, though, I would love to hear about it. But anyways, guys, that's going to do it for this one. So, of course, if you liked it, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel. We're posting content just like this every single week. And of course, right back every Sunday with all the news you can use in the week that was in credit and finance. And, of course, every single day over on ProfitableContent.com. The channel's blog. We now have the latest news stories. We have bank promotions, but you can do as many as you want, no matter what kind of house you're buying, and credit card offers. So even if you're so inclined to give it a shot anyways, well, we've got card offers as well. So anyways, guys, that'll do it for this one. As always, thank you so much for watching. I'll talk to you very soon in the next one.